Jerry, welcome back. I know you're long the world, right?
Can you hear me okay? Am I
Yeah,
am
I
I
got
coming through? Okay, good.
yeah, loud
Hey
and
Dale.
clear. Knowing your style and your discipline, I'd say you're long stocks, you're long Bitcoin, you're long silver. Um, what aren't you long? The dollar breaking
Uh
down?
the dollar breaking down, sure. Yeah. So no, we are long. We're long the Nasdaq 100, we're long Bitcoin,
Yeah,
also gold,
yeah.
silver to an extent. But yeah, I think, even though there is, Dale, even though there is this overhang of debt, even though there is this concern about the macro, and there's always something to worry about. There's always a reason to sell. And based on all the stuff I've seen over the last when for example, when we went through 2022, Dale, that was rough, but that was a great opportunity when you look back. And
Yeah.
as we entered into 2023 and then we got into 2024, there's still about 6 or 7 trillion dollars sitting on the sidelines. And we talked about this before, Dale, is that it's that recency bias. There was a poll that was put out just about a week or two ago by Harris. It was a Harris poll, and they asked people, random people, hey, so do you think the S&P 500 is up or down for the year? And half of the people said they thought it was down for the year. That they asked people, and of course it's not. It's up
Yeah.
dramatically. Relatively speaking,
Because
for
the market is in the economy and those people can't afford to own a stock.
That's it. They were also asked, "Hey, what about unemployment?" And half of the people said it was at a 50-year high. It's not. It's at a 50-year low. They
Yeah.
they all they also asked about, are we in a recession? And over half of them said yes, we are. And yet we still have GDP expanding. And there seems to be this recency bias because 2022 was so rough on the market, because
Hmm.
inflation was so bad in 2022 and now it's coming down. you know it, it, it seems like people are kind of stuck there, at least some people are. And for
Is
us,
it,
this has
you
been a
read
great
the
opportunity.
You read the book A Tale of Two Cities. It's the
Sure.
best of times and the worst of times. Here we are.
Yeah, there you
Here
go.
we here we are. And
There you go.
let them eat cake. Okay,
Well,
so I mean it's bifurcated the economy.
it
P-
it
uh,
really
it,
has.
so a lot of people can't make it paycheck to paycheck with the food prices. So of
Hmm.
course it feels like a bad economy to them. But it's what is it, Jerry? The 10% that are benefiting from asset price appreciation between their homes. They have all that equity and they have gains in the stock market, and that keeps fueling itself
Yeah,
with
that's
that,
true.
right? They
Hmm.
weren't, even though they probably received COVID money, these people, and they should have declined it. They don't need it. A lot of people needed it. It's gone, and they're
Sure.
maxing out their card. So yeah, I guess. In fact, the bonds look pretty good to me, Jerry. I want to ask you about that, but I want to talk about the dollar. And what is bad for the economy is actually could be super bullish for assets because you have yields starting to drop. It looks like we're going to have a nice rally in TLT, held where it had to, and a weaker dollar, which I think is your bias, what you're going to talk about should be jet fuel for appreciation of financial assets, right?
Hmm. Well, yeah, I think so. The dollar has been stubbornly high relative to where it has been historically. Maybe we can get a different chart. Let me get a different dollar chart
Well,
here.
it showed that it's breaking down under what, a 200 day?
Yeah, it's breaking down below the 200-day, which we've had a few of those this year, but this time the breakdown may materialize into something more because we are getting closer to that point. We had the jobs payrolls this morning that were softer than expected. We had those oil cuts production cuts extended through the rest of the year, although they're going to shake it up a little bit in October. And so you really are getting more pressure now on the Federal Reserve to consider dropping those rates. And that seems to be showing up in things like the dollar index, where we've had this stubbornly high dollar. And overall, when you really think about it, why is this dollar so elevated? Well, because the dollar, as you well know, Dale, is the price of money. It's the price of money, and if rates are up, interest rates are the price of money, is what I mean. And so if interest rates are up, then the dollar is going to enjoy that. And as expectations of that declining interest rates, as those begin to really creep in and become more real for people, that dollar is going to gently come down. We expect it to come down into this 100 to 101 area, which is where we were at the end of 2023. It was where we were in the middle of 2023. It's not too far of a stretch. And when you get back down there with the rate expectations to be coming down, well, then you've got $6 trillion sitting on the sidelines in various types of cash or cash equivalents. And so that money can come back in. There's a lot of people who are sitting on the sidelines. They've seen the S&P 500 hit a new all-time high. They've seen the Dow hit a new all-time high. They've seen the NASDAQ 100 hit a new all-time high. And yet many of them are still skittish. The other thing, I really like your TLT idea. I do have a TLT chart in here, I
Bought
believe.
them last week. Leave the dollar chart up for a minute, Jer.
Sure.
So
Yeah.
I see your targets down there. I have a lot of conviction it's going to take out par. So if it does so, and you have a little dotted line there, the high
Mm-hmm.
was 115. Ballpark,
Mm-hmm.
call it, par, and we've moved
Right.
sideways for a year and a half, 2 years.
Yeah.
Okay, that consolidated the decline. I don't think it's a base. I think it's more distribution. So if you take 15 points from your breakdown at say 101 under the line, you get 86.
Mm-hmm. Yeah, and that would be, let's go back and here's another chart that kind of shows you exactly that, where this area right here is really the area we expected the dollar to get to within 12 to
Okay.
18 months. So that
All right.
86 to 87, 88, somewhere in
Yeah.
here, that's
Yeah.
that's when you begin to have rate cuts, and that's the nice thing about the whole backdrop here for investors, is that as we have those rates coming back down, which we know they do, you and I have lived long enough through this to see that the Fed raises rates. Why? So they can cut them. And why do they cut them? So that they can raise them. Like, it's the tool that they have. And
Yeah.
at some point over the next, 3 to 5 years, I would imagine we're going to have something that's going to require the Fed to push rates down to as close to zero as they possibly can, as they love to do. And that's
Yeah.
just going to be, like you talk about, rocket fuel. That'll be rocket fuel for so many assets. And so, as I look out for the rest of the 2020s, I am very bullish on asset prices. And one of the things we encourage people to do at our website, followthemoney.com, where I've been educating for the last 15 years, is trying to get people to understand that if they don't have assets, that they're going to be in trouble, that you have to own assets in this economy. You simply do, even if it just means just getting started by dollar cost averaging a little bit into various assets each week, each month, whatever. But you really do have to have assets. You're so right, because when we look back over the last couple of years, if you didn't own assets, you're right, this is a terrible economy for you. It's not
Right.
that great. You're just kind of grinding sideways, if that.
Yeah.
So very good points.
So you have okay, so some more dollar stuff.
Yeah, just kind of building the case that we're really in a long-term bearish
There.
channel on the
Right.
dollar.
Got
So
you.
this recent enthusiasm is really all just playing out at a lower high. It's really
Yeah.
important to keep that in mind. Um, and then back to the S&P for a minute. Sorry for the scramble here with these charts. It might be hard on the eyes as I scroll, but yeah. So we just had that dollar breakdown below the 200-day. Will it hold? We'll see. There's plenty of there's growing fundamental picture that we really could begin to see a weaker dollar. going forward, even more than we've seen. But then you have the S&P 500, which is trading below a new high and just recently bounced off of the 50-day moving average. We have Apple coming up in just a few days with their WWDC. They're going to be announcing new AI
Yeah.
features in the iOS. We think that's going to push Apple back up, which we own.
To,
Nvidia's dragging the whole market higher as well,
yeah.
and we think that is firmly intact, albeit not straight up. Um, and then when we look at this particular chart, for example, this is a very useful chart I've been using for so many years. It just shows you the breadth of the S&P 500, which shows you we're still in bullish territory. So, for all the hand wringing about where the stock market is, and do we have more upside or all of this? Well, we really do. The last time we got to the take profit zone was back at the very beginning of April, and we had alerted our members and said, look,
Oh, nice.
we're in that kind of frothy place where taking some cream off of the top is totally justified. And then, of course, it did fall. Anytime you get more than, this is just our analysis, but anytime you get a little bit more than 80% or more in the of stocks in the S&P trading above their 200-day moving average, you're usually due for, it's usually you've had enough. At that point, take some cream off of the top.
Yeah,
It
that's a
usually
nice
doesn't.
tool. That's a real
Yeah,
nice tool. I like
thank
it.
you. Yeah, yeah. And then anytime, of course, you get down here, say especially like in 2022, where we had this,
Yeah.
extreme move. I mean, it was just a great opportunity, for folks to
And
get
you,
long.
you're not a revisionist. You were bullish. I remember.
Yeah. Oh
You
no.
were
I mean,
talking about all through that year, and we were talking that year
yeah.
about all the great levels that things could be bought at.
You really, really, very good. And for example, here, this particular chart shows our uptrend alerts that we had issued. So at the very beginning of 2023, we issued an uptrend alert, and then we did that again in June based on the monthly chart, and we just haven't lost it. So our conviction really is not based upon anything external. It's not really based upon anything fundamental as much as it is just literally technical. The charts just continue to confirm an uptrend in the
Well, this
markets,
is
and
how I come up with 6,100. You take the October 22 low and you call 4,800 a breakout, and you tack
hmm
that on top of 4,800,
well, there you
and
go.
that gives you a 61.
Well, there you go. And I don't think that's off the mark. What is your expectation for time on that? How
I
long
think
do you
it
think
should
it
do
takes?
it by the fall.
Oh,
If
wow.
it's going to go, it better go now.
Yeah, I think
Let,
you're.
let me ask you this, though, Jerry. Here's my sister, and she's an amateur. And, a lot of people are worried about this election season. So she told me she's going to sell in October and get back in after the election. Now, that seems a little bit too pat for me. And what makes me think that there could be a surprise is I think a lot of people are thinking like that.
Hmm,
So, what could throw them off? What could throw them off is a break before October, sometime this summer, because they're not planning for it. So, I'm torn between the 6,100 level and, also think 55, 56 might be it too.
hmm,
So I think there's a break coming, but everyone thinks they're okay through October.
hmm.
And then they'll just get out and sidestep the election. And if it was that easy, I'd be a billionaire by now,
Right. Well, there were a
right?
lot of people. A lot of people. Yes, you would. And there's a lot of people who tried to do that in 2016, and boy, they missed out because it was a rip roaring rally. And
I
I think,
remember that. Limit down,
yeah.
and then Carl Icahn left the celebration and went and bought 10 million S&P futures contracts.
Oh, and it just ripped higher. And that's the thing about both of these candidates is that no matter who you like or no matter who you don't like, both of them are good for the stock market, both of them. And it's hard for people, I think, to agree to that, but they have to look at the data and say that's true. I mean, if you look at Biden, for example, The all of the markets have hit new highs underneath him. Like him or not,
Yeah.
like him
Yeah.
or not,
That's a good point.
your 401k is going up. And guess what? If Donald Trump wins this time somehow, then what we end up with is Wall Street exuberant because they know that he's not gonna do anything. It's like Keystone Cops on Wall Street. I mean, so he's not going to do a thing. So you're going to see the animal spirits come out outrageously if Trump wins because then they
But if
know.
Biden wins, he's talking about a 40% capital gains rate
Oh,
tax.
yeah, he's talking. Where is
He's
it?
pandering.
He's pandering. Of course he is.
Okay.
Absolutely. I mean, yeah, this is all pandering. And so as far as the stock market goes, for those listening, this is just my humble opinion, is that trading based upon politics is just not a good idea. Oftentimes, in fact, I had a chart I just showed. I wish I had it. Boy, it'd be great to show right now. But it showed that going back to say 1950, so ever since the foundation of the S&P 500,
Okay.
if you put $10,000 in, I remember the numbers, put $10,000 in, and you just held it. Well, of course, it soars to something very, very big. Obviously, a very big number. But if you only held during Republican administrations, that $10,000 only goes to 100,000 over since 1950. Okay, and then or if you just held, if you said I'm only going to hold during Democrat, presidents, well, during that time, I think you turned it into 300,000. But if you just would have held the thing, you would have turned it into over 1 million. And so the point is that we often try to outsmart ourselves
Yeah.
uh, and outsmart the market, by getting in and out, in and out, in and out. And that's fine for a trader, but for your long-term investments, it's just good to stick with high quality companies and just sit. Um,
Yeah, I've heard, things like the dollar does better under Democratic administrations and
as does the
worse
stock
under
market.
Republican.
Yeah. Yeah, that's true.
That's just a dollar. So anyway.
Yeah. Well, even the stock market does better underneath Democrats. It's just historically, But but
So
okay,
you see no end to this bull
no,
market.
no, it
Okay.
doesn't matter. It doesn't. Are either one of them going to not print money? Are either one of them not going to prop up the stock market? I mean, in 2020, Trump threw everything, including the kitchen sink, at the economy like we have never seen. We got a bull market that rallied all the way into 2021, based upon all of the shenanigans that went on in 2020, all the checks that were mailed and all of this. So Trump is in no way, shape, or form some sort of libertarian who's going to come in and pay off the national debt as he promises. That's called pandering as well. So both of them are going to max out the debt.
He's talked about defaulting on
Yes, and he's more likely to do that than to pay it off.
it. Yeah, that'd be pretty bullish. The
Right?
dollar, huh?
Yeah,
Huh? Hey,
right.
could we take a look at your metal charts, Jer, and see
Oh,
what you're seeing there?
you bet. So let's see. Let's look at silver first. Silver is holding on. There's a really important number that we follow on silver. It's the 30 SMA. If you're looking at a daily chart, the 200 and
Okay.
the 30. 30 for whatever reason, it just really reacts to that area, and we're getting ready to possibly hit that maybe this morning if we pull back. But 30 was the really key support level. The 30 SMA becomes the next support level. So we really want to hold on to about 28.50 here on silver. If we break down more than that, that's going to indicate that some of the conviction in this trade has just kind of evaporated. And I don't think that there's really a justification for that because for a couple of reasons. I see silver going up to about $50. That would be back to its all-time
Yeah,
high, which is kind of
right.
ridiculous. It's one of the only metals or only commodities that hasn't hit its former high. But
Good point.
uh, but overall, silver is needed for EVs. It's
Yeah.
needed for solar. It's needed for all of these different things. And what I think the big elephant in the room is China. And China has been struggling economically, of course, as we all know. But things are getting better there. And don't expect the U.S. media to tell you that. Their job is to constantly berate China, talk about how backwards they are, talk about how they can't, you know, put one and two together, how they're probably going to go away in the next year, how they're completely communist, and all of the talking points you hear from the normal Western media about China.
We
But
they did report on a successful lunar landing on the other side of the moon that we were never able to do.
that's right.
And they're bringing back rocks from that side of the moon and
Wow.
not bringing them home, dropping them off at a satellite.
Hmm.
So it used to be a space race between Russia and us, right?
Right.
China's just, they look like they have it together a little bit more than Elon Musk.
They've really got it going on, and
Yeah.
they're
So
and they're doing better than the West really lets on. And so their economy, from our data that we see, is improving, and that bodes well for the global economy. That bodes well for demand for oil and for silver and for all these other things. So overall, any weakening we see in the United States economy, which we do see a deceleration, especially with jobs numbers, and this is what the Fed ordered, that they wanted this. So we're starting to see a deceleration of the U.S. economy. But I think the deflationary pressures within China have been so fierce and strong that it's causing consumers and consumption to really rise. And so I think we're going to have a kind of a washout. So even if the U.S. decelerates, uh, China, I think, is going to pick up the slack. So I don't think we're going to see a major
they've done
shift.
that before. They
Yeah,
did that in
right.
'08. '08, they're the ones
Sure.
that pulled us out of it.
That's right.
Um, are there any other like commodity charts? Oil looks kind of ugly, but things like the softs. Are you looking at grains, copper? Because if we're going to have a bear market in the dollar, it should be supportive of commodity markets and maybe even jet fuel for those markets that are having weather issues.
Yeah. Well, yes, we are bullish on copper. DBB is one ETF we like to
Okay.
follow, which covers aluminum, zinc, and copper.
How
Copper's
about
had a little.
DBA? How
Uh,
about
D,
agricultural? About
DBA
it.
has been DBA has been very hot, very hot. When I look at DBA, I see a market that's overheated. That's one of the few markets that I see is overheated.
Okay.
Um, but DBC no, but DBA yeah. DBA has had such a run that I would be afraid to pile into that one here. If you look
Okay.
at, say, gold, for example, gold continues to hold its highs. It's struggling at that 2450 level. And very instructive technical, maybe a quick lesson here for those watching. But you see these long wicks. Many of your folks probably
Yeah.
know this, but I
Yeah.
always watch for those long wicks. When you get that long wick like that, it rejects higher prices, and you often will linger for a while. We got a couple of those. And we've been kind of consolidating below those wicks, which were up to about 2450. So we may consolidate a bit longer on gold, but a deceleration of the dollar may, shorten this and cause it to go
Yeah.
back up. So
You don't
that's one
think
thing.
we're going to see that support zone again, do you? 2100,
Maybe,
2150.
yeah, I would expect maybe just a pullback to it would probably be constructive
Yeah.
if it meanders here, but I wouldn't
Yeah.
expect it to go much lower than that. No,
Yeah.
no.
I don't even think it's going to get down there, but
Yeah.
it'd be okay.
And
Um,
I also have a TLT chart because I know you've been talking about that. Let me see if I can grab that real quick because
okay.
I agree with you. There it is. Okay, so on TLT, we have an 80 to 85 support range, and we actually touched that in 2023. You can really see that we're in a bearish channel here.
Right.
I don't know your full thesis, but from our perspective, with rates obviously coming down, bonds have been destroyed, and that seems to be the big news. The news is that TLT and and many of these long-term bonds have been decimated. Well, to
Yeah, they
me,
have.
that's an opportunity.
And they
That's an
bottomed last week on failed auctions or very bad auctions in the market, and they still came back.
and they still came back.
So I'm thinking your dotted line, Jer.
Yeah, the dotted line is probably the next, that's the big resistance there, we
There'd
would
be a
run into.
quality from the first rally low we had, and this is
Yeah.
a higher low, about 61.8. Almost has a look of Head and Shoulders bottom with a down
Yes, it does.
slanting line.
Yes, it
So
does.
yeah, so that would measure pretty good too.
And you've got this incredible volume coming in over the last, half a year or so. So it's been really nice. The other bond ETF we like, it hasn't suffered nearly as much, is VCLT. Let me see if I have it down here. I believe I do. Yeah, there it is. Here's VCLT. So this is the Vanguard Long-Term Corporate Bond Index ETF. I don't own this, but I like to follow it because
That
it's
looks good too.
high quality bonds. Yeah, it's really
Yeah,
come down. I mean, you're able to get it at where it was, say, back in 2017 right now, or,
yeah.
2019. So and this one's a high quality, ETF, high quality long-term corporate bonds. And with
L-
rates, going back down, the
Let's
price
see
of this
your
is just going to go.
yeah. Let's see your uranium chart. You passed it. I'm curious what you're looking at
Uh,
there.
Uranium. Yeah, we have a couple of charts there. So like uranium,
There's
URNM.
uranium. Okay,
Yeah,
Sprott. It looks heavy, doesn't it?
it does. It looks a little heavy. It's been lingering up here all year long. It's been kind
Yeah,
of struggling below 60. And then also, you can see we had a cup and handle pattern here on URNM, but
and it
it's now,
failed.
yeah, well, maybe it's got this 50-day support. We'll see
Failed.
if it could bounce.
I
It
think
could
it's
bounce.
I think it's being pressured with the weakness in crude oil,
Yeah,
because
you're right.
it's an energy play.
Yeah. And then we have Uranium Energy Corp. I don't own this one either, but I like to follow many of these
I'd
different
buy it
companies.
at the dotted line.
Yeah, and it's almost there. It's
No,
almost
the
it's
lower dotted line.
oh, this one here. Yeah. Well,
Yeah, that one.
woo. Yeah, that would be nice. That would be
All
nice.
right. Well, you write that down
Okay, we'll do it.
for our next visit, and tell people how they could follow your great technical work, Jer.
Hey, thank you so much. Followthemoney.com is where people can find us. We have a free podcast. We have a free YouTube channel, of course, lots of videos on YouTube. But then we also have a membership here. We actually have a 25% off for life. You can use the code 25 now, right now. Just simply come over and check out what we have. We offer a trading software. We offer ongoing trading education, daily swing trading ideas, daily position trading ideas, all that stuff ready to help people make money in this market. And we always appreciate coming on here, Dale. I appreciate your good work.
It's interesting. You have uh, a trading. You have the capability of a trading mentality, but you're also, for our kind of business of, looking for trading opportunities, you also have the knowledge of what a financial planner would do. So you're teaching people not just, how to make some good trades, but how to accumulate wealth. And
Mm,
that's because you could be a great trader, and if you're not managing it right, and you're not, diversifying it right with your trading profits, it goes away. So,
mm.
anyway, check Jerry out.
Thank you so much,
If
Dale.
I was a neophyte, and I was looking for somebody to help me with just trading and how to accumulate wealth, I'd be talking to Jerry.
Well, it's
I
a
don't have a,
huge
I
compliment.
yeah, I don't have enough money to be one of Jerry's
Oh,
clients.
come on, Dale.
Anyway, bless you, buddy. Lots of pips rain down on you and your people, and
Yes.
it's always great to talk to you.
Always great to talk to you. Bless you, brother. Thank you.
All right, so Jerry Robinson, everyone, and you can find him on X at FTM Daily. Follow the money daily, and that's what most people follow. I follow a few other things. So anyway, have a great day, everybody. Good luck today. I think the Bank of Canada's out, and pretty soon. And let's see, 2 days to NFP. So that's a wrap. Thanks again, Jerry. You could join the team in 12 minutes on the morning edge. So go take a shave and get in there. Okay, sir, Zach. Hope you enjoyed Face. Adios, everyone. Don't just count your pips, count your blessings.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.